I'm going to backtest the LCE model in real time and actually walk you through every trade, start to finish. No cherry picking or perfect examples, just a full raw week of trading exactly how I trade, what I'm looking for, what I'd take, what I'd avoid, and why. The purpose of this is to show you how to analyze the market beforehand and also how to execute well when the time comes. But once you see the system play out over and over, it only becomes easier to execute it and makes you more confident. Then you get even better results and hence more confidence, which will lead to even better results. It's an upward spiral that starts with executing and following your system consistently. So that's exactly what we're going to do in this video. But first, a few ground rules. Rule number 1, every trade must follow the LCE model, level, confirmation, execution. If it's not a level-to-level trade, I don't touch it, period. By the way, if you need an intro on how to trade the LCE model, I'll link some videos here right now. Rule number 2, I only trade during regular market hours, 9:30 a.m. to 4 p.m. Eastern. And realistically, I'm done before noon. That's when real volume shows up. Rule number 3, we're only looking at breakout trades, not mean reversion or entering in the middle of a range, just clean breaks to new levels. And finally, rule number 4, risk stays identical on every single trade. No sizing up or down, we want to keep our gains consistent. This is going to be on ES Futures, and the week we're back testing is the most recent one at the time of this recording, November 3rd to November 7th. Before we begin, quick disclaimer, nothing here is financial advice. I'm just showing you what's worked for me. If you use it, do it at your own risk and size properly. Let's start with Monday. The first thing we're going to do is zoom out to the 1-hour cloud to assess the overall trend. We use the 1 hour, the 30-minute, and the 15-minute to establish our bias. Once our bias is established, we move down to the 5-minute to look for potential trades and then trade in that direction. The 1-hour cloud here is mildly sloping down, which tells us that the price is somewhat bearish. Then we move to the 30-minute. And on the 30, we see that we're somewhat flat. Price is above the cloud, but the cloud itself isn't sloping up or down. It's neutral. So this time frame doesn't really point us in one direction or the other and doesn't add probability to either side. Now, if we go down to the 15-minute, we see that the price is also kind of flat. There isn't really a bias here to either side. So one time frame points mildly bearish, and the other time frames are flat with no bias to either side. This is basically telling us that our bias should be lightly bearish, but we don't have a strong expectation toward either side. So now we go down to the 5-minute, which is also quite flat. Here we want to map out our two possibilities for the day. Since we're only looking for breakout trades, we either want to see a break of this supply level, and we're going to take a long here to the next level above, or we want to see a break of this demand. And then we would go short to the level below. That's all we're looking to trade. If the price doesn't break either of these levels, it means we're going to range around this middle level, and that's definitely not something we want to trade. So now that we've got our daily plan set, all we do is set alerts at each of these levels, then shut down our screen and wait. And here we got an alert that the bottom level hit. Now we need to confirm that the price will indeed keep breaking out. That's the reason we establish our higher time frame bias. Because if the 1-hour cloud or the 30-minute cloud here was strongly bullish, then we would be hesitant to go short here, at the very least. Because that's telling us that long-term buyers are still very strong, and market structure is still supporting a move up. If the higher time frame cloud was bullish, this may be a spot where the dip gets bought up and pushes higher, therefore invalidating our short. But our overall bias is actually mildly bearish, so we would be inclined to take this short. And once you combine that with the aggressive bearish price action, you see that a breakout becomes the more likely option. So in this case, we would enter short at this demand zone with our stop in the middle of our two zones, right above the current cloud. Our target will be at the next demand zone, of course, because all we're looking for is one clean level-to-level move that aligns with our bias. So let's see what happens. And the price ended up moving straight to our target. That's our one successful breakout trade for the day, and we lock it in. That's it. Then we close our screens and wait for the next session. Now let's move on to Tuesday. So here we're on the 1-hour chart for Tuesday. We could see yesterday's move and the drop lower. Now overnight we dropped even further, and then bounced a little in the early hours of the morning. This gives us a sharply bearish cloud on the 1 hour. So our bias so far is starting to look bearish. And if we move to the 30, we should be expecting to see pretty much the same thing. The price dragged down the cloud overnight, so now we see a thick blanket of resistance here. Our bias so far is looking quite bearish. Then we move to the 15-minute. And on the 15-minute, we see a bearish cloud as well. So all of our higher time frames are giving us a bearish bias. That means for the day, we shouldn't be looking for any longs and only looking for shorts. We definitely don't want to trade against long-term momentum because that can snap back on us at any time. So now let's go into the 5-minute and start making our projections for the day. The ideal setup we'd want to see here is, of course, a break of this demand level and a move lower. That's what aligns with higher time frame momentum. In terms of the bullish scenario, it gets a bit more tricky. Since our bias on all time frames is fully bearish, we don't really have a breakout plan on the long side. It's not high probability, and it could get slapped down by long-term sellers at any time. We would need to see the price actually flip the cloud on the higher time frames before considering a long. It's not impossible, but it'll take a lot of time and structure, and that would probably happen later in the day if anything. But our primary focus is to look for shorts. Now let's see what happens. So we see that the price dips a little before immediately surging higher. What do we do here? Well, it might look and feel bullish, but remember that the higher time frame clouds are still strongly bearish. Going long here is basically the equivalent of going long at a strong resistance. It probably won't end well. Now remember, taking the level-to-level trade here may or may not work, but we're not focused on this specific trade. We only care about the trades that will make us profitable over time. And the highest probability trades are trades where everything aligns. Everything else is lower quality. Actually, I have a video talking about exactly how to identify those A+ trades and the other types of trades to take or avoid. I'll link that here for you to watch later. But now we've hit another supply and demand level. So what do? Well, it's simple. We just do the exact same thing we would have done for our first trade. That means making projections at the level above and below, setting alerts and waiting. We don't necessarily want to go long just yet, so we'll set alerts at the lower level and look for a breakout. And if that happens, we'll enter short around the middle of the level. So let's see. The price did end up going lower and breaking into our demand level, which is our cue to go short. We put our stop above the cloud and target the next demand level, then simply let it play out. And that's one green trade for the day. Now we lock in our gain, turn off our screen, and come back tomorrow. On Wednesday, we see that the 1-hour cloud is still firmly bearish, although it's starting to flatten here a little and maybe begin to curve up. This doesn't mean anything yet, but it's something to keep in mind. Let's take a look at the 30-minute. So on the 30-minute, we see that the cloud is actually flat overall, and the price is even beginning to move above it. This is a little different from the 30-minute yesterday, which was strongly bearish at this point. And if we go on this 15-minute, we see something similar. The 15-minute was bearish yesterday, although it's flat today. Now, this doesn't necessarily mean that the price will not continue being bearish, but our bias is a lot weaker. It's kind of like Monday, where one side only had a slight advantage. So now, we set our alerts at both the upper and lower level and wait for one of them to break. And as we see here, we broke above the supply level very sharply. Now, what we can do here is either enter immediately, although it's a little risky, since the higher time frame clouds still aren't bullish yet. The other thing we can do is wait for the next level to hit, if it happens, and go long there. At that point, we'll probably have more development on the higher time frames for a bullish cloud, which gives us more support for another leg up. But that would give us more certainty when compared to this long. So let's say we want to be patient and wait. That means we skip on this potential long and wait for the next level to hit, if it ends up hitting. And here we see that after some sideways movement, we end up finally hitting our upper level. We can check the 15-minute really quickly just to see. And the 15-minute is showing us that the cloud is indeed starting to slope upward and start trending higher. So we enter long, with our stop under market structure and our target at the next supply level. Then we simply wait for it to play out. Now there were two potential trades today. Neither of them were a picture perfect A+ setup. But we also can't expect every day to be perfect. That's how we would have approached a day like today. By the way, this is exactly what I teach traders inside my LCE Accelerator program. We run weekly group calls where we break down trades and keep your process tight. You'll also have a private one-on-one chat with me, so you can get feedback or ask questions anytime. You'll get access to my exact level-to-level chart, the one I use every day to trade this framework, and you'll be part of a private community of LCE traders who trade the same system and keep each other accountable. So if you're interested, click the link down below to apply. Now let's move on to Thursday. On the 1 hour, we see that the cloud is flat. That doesn't give us any new information. So let's go down to the 30-minute. And the 30-minute tells us the same thing. The cloud is also flat. So let's go down to the 15-minute. And the 15-minute cloud is also flat. Now let's go down to the 5-minute. And the 5-minute is also flat with no direction. So all time frames here are flat. That tells us that we have no bias to either side. The price could break out to either side equally, and we want to be prepared for both scenarios. The other thing is we want to make sure the price fully breaks out so we don't get caught in a range, because that's a lot more likely when the clouds are flat and not trending. So we set our alerts to either side, then turn off our screens, and wait to get notified. And we have a nice sharp drop with a cloud flip here, which is always a good sign. Momentum is bearish now, of course, and we don't have any support on higher time frames telling us that this won't go down. So we can take this short and target the next level. We place our stop above market structure, about halfway between these two levels. Then we set our target and simply wait for one of them to hit. And that's it. We locked in another win. Also, if you happen to miss this one, there were a couple of other shorts later on because this was a strong trend day. So plenty of moves here to secure your one win. Now let's move on to Friday. Starting with the 1 hour cloud, we notice that it's quite firmly bearish. That starts us up with a bearish bias. Next, we have the 30-minute. This is also very firmly bearish. The cloud is sloping down quite heavily and has a thick blanket of resistance. Now, based on this, we can expect the 15-minute to be quite similar as we move down to that time frame, and we see that it's indeed quite similar to the two higher time frames. The cloud is firmly sloping down. This makes our overall bias firmly bearish. It's very similar to Tuesday. We should only be looking for shorts here, and not any longs, or at the very least not now, and wait for proper market structure to develop to the upside, get the cloud to slope upward, and then we might consider it. But for now, our bias is short. So we set an alert at the bottom level and also the upper level in case the price moves up there and then wants to come back down, so that we're ready. Then we wait. So we see a very sharp drop, and now we'll start entering short, same as always. Stop above market structure, halfway between the two levels, and target at the next level. Now let's see what happens. And for this trade, we ended up getting stopped out. In this case, what I like to do is move my stop to break even once the price moves 50 to 60% in my direction, so that I'm far enough not to get stopped while also protecting my profits and making this a risk-free trade. So I'd be break even on this trade, or maybe take a loss if I didn't move my stop to break even on time. So let's go with the worst case scenario here, and let's say I've taken a full loss. Following my risk management system, I'm allowed to take 2 trades a day. That means that now I can take 1 more trade. So now I set my alerts to both sides again and wait. And it doesn't take long for the alert to hit. The price is ready to break lower again, so we go short with our stop above the high and target the next demand level. Then we wait for it to play out. And that's how the week wrapped up. When you trade level to level with the LCE model, everything becomes simple. Either it's a breakout or it's not. Either the probabilities line up or they don't. You're not sitting there overthinking, second-guessing, or forcing something that isn't there. That's how you build the consistency to scale to incredibly large numbers. If you're focusing on anything beside that, you're wasting your time. So you don't need to catch every move, just let the system do the heavy lifting for you and execute well. If you want to start trading this way, check out the link below to join the LCE Accelerator. And if this video helped you, let me know by dropping a like and subscribing, and I'll drop more videos like this. I'll see you in the next one.